What's up guys, welcome back to the channel. In today's watch list, I've got some setups you'll definitely want to keep an eye on for next week. If you've been struggling to find consistency, this video is going to help you simplify your approach and spot the same opportunities I'm looking at every day. Make sure you're subscribed. Let's get this video to 100 likes and let's get straight to it. The first on my watch list is ticker symbol APLD. Now I know some people look at this recent pullback and think it's a bad sign, but if you zoom out, it looks almost identical to the last consolidation pattern we played. Back then, the stock dipped into support, broke out of a down sloping trend line, and then ran hard. Here are screenshots that we made in the Discord. That's the exact type of setup forming again right here in my opinion. On the chart, you can see APLD is pulling back into that $13.50 to $14 support zone, which lines up with the moving averages. The candles are still holding inside this range, and as long as that level holds, I view this as healthy consolidation in a strong uptrend. The MACD is extended but starting to flatten, which tells me momentum is cooling off and could reset for another push. I'm bullish here because every dip into support has turned into a buying opportunity. Buyers are still stepping in, and the overall structure hasn't broken down. This is exactly how strong trends move. They rally, consolidate, shake out weak hands, and then move for the next leg up. That's what I'm looking for going into next week. So here are the key levels I've got marked. You have your immediate support, which is that $13.50 to $14. As long as this zone holds, I'm confident in the setup. You next have your resistance, $15.50. This is the key spot to reclaim. Above that, momentum likely comes back pretty quickly. My personal upside target is this $18 to $20 range. This is the next big area I see personally APLD testing if momentum returns. And of course, we have to talk about the risk. If $13.50 fails, the next strong support is around $12. For anyone not in yet, scale in near support, protect your downside, and be patient. If you're already in from lower, this dip is just another spot to sit tight and let the trade work for you. The biggest mistake people make is overreacting to short-term red days in the middle of a much bigger uptrend. APLD is given another textbook setup. The chart is nearly identical to the last run. The support zone is holding, and I'm expecting another push once momentum flips back in. As long as we stay above $13.50, I'm bullish and looking for $15.50 next, then potentially $18 to $20 if strength carries through. Next on the watch list is ticker symbol AAOI. I'm not sure why a lot of people are not talking about this setup, but these are my favorite type of setup to swing trade. If you zoom out, you'll notice AAOI has already proven it can make big moves. Earlier in the summer, we had that massive breakout out of consolidation that ran hard. What I'm noticing now is a very similar setup forming a tightening wedge pattern with higher lows squeezing into resistance. These kind of setups are usually the calm before the storm, and when volume comes back in, we often see explosive moves towards the upside. Looking closer at the chart, price has been consolidating between this $23 and $27 range. Notice how every time it dips towards the bottom of this wedge, buyers step back in and push it higher. That's a sign of accumulation. We're also sitting right on top of the 9 and 21 EMAs, which are starting to curl upward again, another bullish signal that momentum is preparing to flip. On the MACD, you can see it's been flattening out and looks ready to cross back positive. That's exactly the kind of confirmation I want to see in these type of setups. When the MACD flips while price is consolidating, it usually marks the start of the next leg higher. Now, of course, let's talk about key levels because this is what matters most. You have your immediate support, which is that $23 level. This is the floor holding the wedge together. As long as we're above here, the setup stays intact. You next have your resistance, which is 27. This is the current breakout level. A close above here with volume should send the stock much higher. Upside targets, my personal is $30 plus. That's the first realistic target once the breakout confirms. Longer term, this has room to push even higher if momentum builds. This is a textbook wedge breakout setup. You've got consolidation, you've got higher lows, you got momentum indicators starting to reset. The risk/reward is attractive here because downside is limited by support around 23, while upside into 30 and beyond gives us a clear multiple on the risk. Now, for those of you in the Discord, this is one we're preparing to enter. We're not going to chase, but I am looking to start scaling in near the bottom of this consolidation. We've been patient, we've mapped out the levels, and next week, I'll be looking to begin building an entry here. Plan is simple, scaling that support, manage risk below 23, and ride the breakout when momentum hits. Next on my watch list is ticker symbol PLTR. This stock has been stuck in a range for weeks now, and while most people see this sideways action as boring, I actually think this is building up for a bigger move. Looking back a bit, PLTR had that strong run early in the summer, followed by a steep pullback. Since then, instead of completely breaking down, the stock has been holding in a pretty tight consolidation zone. This type of action usually tells me one thing: buyers and sellers are battling it out, and once the balance shifts, you get a powerful breakout in one direction. Right now, PLTR is sitting in a box between 150 and 156. Every time it dips towards the bottom of that range, buyers step in to defend it. And every time it pushes towards the top, sellers show up. That's a classic consolidation pattern. The longer it holds this range, the bigger the eventual move will be once it decides a direction. Now, if we look at the MACD, you can see it's been pretty flat. That lines up perfectly with consolidation because momentum hasn't picked a side yet. But when the MACD starts to curl and cross, combined with a breakout in price, that's usually the signal momentum is returning. Here are the levels that matters most going forward. You have your support, which is 150. That's pretty much the floor. If it breaks below here, we can see more downside pressure. You next have your resistance, 156. This is the ceiling. A clean breakout above here with volume is what I'll be looking for. Then upside target, my personal is 160 to 165. That's the first area I see price testing on a confirmed breakout. Beyond that, the chart opens up even more. The reason I like this setup is because it's all about risk versus reward. If you're watching closely, you don't need to chase. You let it show its hand. If PLTR breaks below 150, you step aside. But if it breaks above 156, you got a clear path to 160 plus with defined risk. That's exactly the kind of structure I look for: tight ranges followed by momentum moves. My outlook going into next week is simple. Keep watching this consolidation phase. That doesn't last forever, and when this range breaks, it's going to provide opportunity. The key is not to overcomplicate it. Let the levels guide you. Support at 150, resistance at 156, and upside potential into 160 to 165 if the breakout comes. That wraps up this week's watch list. Remember, it's not about chasing every ticker. It's about focusing on the setups with the best risk to reward. Mark your levels, stay patient, and let the market come to you. If you found this helpful, make sure you like this video. Drop a comment which setup you're watching, and don't forget to subscribe so you don't miss the next update. Until then, trade smart, and I'll see you guys in the next video.